Good morning. Today is Friday, January 19th. I hope you're all doing well. I had to take you on my walk because it's a bit of a busy day, unshaven and everything. So hope you don't mind. So let's talk about why the market is not going to collapse, unlike all those gloom and doomers things. So stick around if you find that interesting. Well, hello, my YouTube friends. I hope you're all doing well. My name is Adam Kahn, and I'm the Rational Investor. Enjoying my walk. The weather's warming up here in Las Vegas. Just I hope you forgive the unshaven, hair not combed quite thing, but that's okay. We still love the markets, and that's what we're really here to talk about. So let's talk about why the markets are not going to collapse, because I don't see them collapsing. Now, keep in mind, this is not advice. This is not financial advice. You guys need to do your own research on what is important for you for your financial decisions. I'm just a guy on YouTube sharing my opinions from what I found over the years, and probably doesn't work for you. So, like I said, you need to make your own decisions. Now, I just don't see it. I see all the things they talk about and all the data in place, but you have to understand that the algorithms and things that are in place have that information as well and account for that, even down to things like a war breaking out. These systems have gotten so intricate that they really take into account everything that you could think of and then more, and they value that at the percent rate that it could or could not happen. So they're well aware of the credit card debt. They're well aware of the prices of cars and the default rates and everything else that you see that the gloom and doomers talk about. You know, I saw one today talking about the Hertz selling a bunch of EVs and talking about how that's because the economy is doing terrible. While Hertz is saying it's because they've taken on bigger expenses due to the crashes in EVs. He kind of laughed and highly doubted it. But as somebody who owns a Tesla and has talked and asked a bunch of the right questions, I can tell you they do cost more to repair. One of the reasons being Tesla is so smart, they've set it up if you use any non-Tesla parts, you voided the warranties. Well, that's not the same with other car companies. It also causes the insurance to be more expensive. Now, I imagine that Hertz self-insures, and actually Tesla does the insurance now as well. But think about it. If you bought a bunch of Teslas for people to rent out, only to find out when they get into an accident that when you repair them, you have to use Tesla parts, which are more expensive, you might be caught off guard. Now, I'll blame Hertz for not doing the research on that, but I'll also tell you it's true, and I'm sure that they have a certain amount of damage to cars. The other thing I bet they're finding out is there's probably not the demand they thought there would be, just when I think it through logically. How many people are going to want to rent an EV that aren't used to it already? Now, maybe they want to try out a Model S or a Model X, but I don't envision a bunch of people renting Model 3s and Ys if they don't already have them and they're not set up to charge the cars. I just don't see them starting to learn that whole situation versus just getting what they're used to, probably at a lower payment. I also think that you're overstretching things when you're talking about Hertz, who's oftentimes had poor management decisions, making decisions and having to sell off a bunch of vehicles as an indication that the economy is doing terrible. Really, I think we've slowed, and I think that's what they wanted. But CPI is still over 3%, so 3% inflation is really reasonable. The Fed's also indicated that they're likely to cut rates 3 times this year. Markets are predicting 6 or 7. I saw an interview with Bill Ackman where he's on the side of the markets thinking that right now borrowing is expensive and the Fed will have to cut quicker than they say just to make it more reasonable for the inflation rate. I don't know if he's right, just because I think the Fed's a little bit more concerned about inflation rearing its ugly head again if they cut too quickly. So I think they're going to err on the side of not cutting that fast. But I agree with him in theory that they shouldn't be so sensitive to it because, there's an old saying, the cure for inflation is inflation. And I think we've gotten to the tipping point where things are expensive enough that it's going to slow down whether the rates are at 8% or 3%. I don't see cuts all of a sudden stimulating the economy again the way that the Fed's worried about. It doesn't really change the new electric and gas bills and everything that we get in our homes and the insurance and everything else, which is probably hurting people. I think people are pretty well stretched. And when I go out to dinner, we went for my wife's birthday to a nice steakhouse here in town, Echo and Rig. I'll give them a little bit of a plug. Anyway, it was a really nice dinner. It was a Wednesday night, and they were less busy than they used to be, but they were plenty busy. And I think that's a sign of the economy. That's what I see, but maybe we all see what we want to see. They're still doing business, employees are still employed, but they're not so busy that there's a wait to get in. I think that's completely reasonable. And part of the reason is when I go out, prices are expensive. So we go out less. And I'm guessing if we go out less, so do you guys, and so does everybody else. And I think everybody's a little bit more careful with their money, which is called a slowdown. But unless the employment spikes and people are out of a job, we're all complaining because we want to be able to have more fun and get more things, but we're okay. I think that's pretty much same with a lot of people. And some people are still thriving. I'm also watching the stock market continue to take off, which I think we might see a repeat of last year. Google, Amazon, Meta, they're all making 52-week highs or close to it. It's hard for me to see what stops them, even a slowdown in the economy. I think they're great companies, well run, continuing to grow. So that's my take on where we are and what's going on. I don't see any big collapse. I don't think that's the Fed's goal. And I think the only way they would cause it is to start raising rates to cause massive unemployment. And that's not really what their goal is. And then don't be so upset. Their goal is not deflation. They're not hoping to cause things to become cheaper. They're hoping to get inflation down to 2%. That's still inflation. Means things are going to be expensive. I think we have to get used to it. And that includes housing. Don't sit on the sidelines waiting for some big housing collapse that may never come. Now it might. Maybe you'll get lucky. But if it doesn't, maybe you'll never have a house. And I hate to think that. All these guys talking people out of buying because it just doesn't make sense drives me nuts. You guys really need to make your own decisions. Don't listen to me, don't listen to them. 86% of people think it's the wrong time to buy a house. Well, I think that means there's an 86% chance they're wrong. Generally, when everybody thinks one way, the markets do something different. So, I don't know. Like I said, I'm just a guy on YouTube sharing my opinion. But I'm not selling properties. I'm holding on because I think they're going to continue. So anyway, again, do me a favor, hit that subscribe button, smash the like button, make some comments. If you made it this far, make some silly comment about, hey, I watched you all the way to the end, and have a great Friday.